Right now, the crypto market is sitting at a fear and greed index of just 8. Extreme fear. But while sentiment is at its lowest levels, institutions are accumulating, tokenization is accelerating, and trillions are quietly moving on-chain. So the real question is this fear justified? Or is it creating one of the biggest opportunities most people will miss? Let's break it all down. Before we continue, I did just want to make a quick correction to yesterday's video. I put up the wrong slide when talking about Ripple Treasury processing 13 trillion in payments. This was the slide that was supposed to be up. Welcome back to the channel, where we break down what's actually happening in crypto without the noise. If you want clear, grounded insights into where this market is heading, make sure you're subscribed. Let's get into it. A quick disclaimer, this content is for informational purposes only and is not financial advice. As always, please do your own research before making any investment decisions. So let's start with the big picture. The Fear and Greed Index sitting at 8 tells you one thing. The average participant is uncertain, hesitant, and likely sidelined. Historically, these moments don't happen at the top. They happen during disbelief phases, when the market is transitioning. Now, contrast that with what's actually happening beneath the surface. Tokenized stocks alone have just crossed 1 billion in total on-chain value. That might sound small compared to traditional markets, but that's not the point. The significance is that real-world assets, stocks, are now being represented on-chain in a meaningful way. This is infrastructure being built. And if you zoom out, tokenization isn't limited to stocks. We're seeing it expand into bonds, real estate, funds, entire financial products. So while sentiment says fear, capital and innovation are quietly moving forward. Now let's take that one step further. Over 61% of all tokenized assets currently exist on Ethereum. That's a dominant share. And it tells you something important. When institutions begin experimenting with tokenization, they're choosing established infrastructure. Ethereum, for now, is acting as the primary layer for this activity. But what's interesting is not just dominance, it's growth trajectory. The chart shows tokenized asset value rising steadily over time, with acceleration picking up more recently. This suggests we're still early in adoption, not late. Now pair that with what we're seeing from major players. BitMine has added over 71,000 ETH, bringing their total holdings to 4.73 million ETH, 3.9% of the total supply. That's not retail behavior. That's strategic accumulation. And when we have the Ethereum Foundation itself staking over 22,500 ETH, valued at over 46 million, this is key. Instead of selling into the market, they're reinforcing long-term positioning. They're signaling confidence in the network's future. So again, fear on the surface, but underneath, we're seeing accumulation and long-term alignment. Now let's talk about price action and sentiment. Ethereum just posted a 1.33% gain in March, breaking a 2-month streak of losses. On paper, that doesn't sound like much, but psychologically it matters. Because momentum shifts don't start with massive moves, they start with stabilization. They start with the market finding a floor, and that's exactly what this could represent. Now the key question becomes, can that momentum carry into April? Because if it does, this extreme fear environment could quickly shift into something else entirely. And historically, those transitions happen faster than most expect. While that's happening, DeFi continues to evolve. Aave, one of the largest lending protocols with over 23.5 billion in total value locked, has now launched on OKX's Ethereum Layer 2 network. This is a big deal for a few reasons. First, It shows that major DeFi protocols are expanding beyond the main chain, looking for scalability and efficiency. Second, it brings liquidity and activity into layer 2 ecosystems. And third, it reinforces a broader trend. The infrastructure is being optimized for real usage. Lower fees, faster transactions, more accessibility. This isn't speculation, it's refinement. And over time, that's what drives adoption. Now let's zoom out even further. One of Europe's largest banks, BNP Paribas, is now offering Bitcoin and Ethereum ETNs to retail clients in France. Think about what that means. Traditional investors who may never open a crypto wallet can now gain exposure through standard brokerage accounts. This removes friction. And when friction is removed, participation increases. This is how markets expand. It's not always through hype, it's through accessibility. So while the fear and greed index sits at extreme fear, traditional finance is quietly opening the door wider. So let's connect everything. Extreme fear across the market, tokenized assets crossing new milestones, Ethereum dominating early infrastructure, institutional accumulation continuing, DeFi expanding into more scalable environments, major banks increasing access for retail investors. These aren't isolated events. They're pieces of a larger shift. A shift where digital assets are becoming integrated into the broader financial system. And transitions like this don't feel obvious in the moment. They feel uncertain. They feel like hesitation. They feel like extreme fear. If you made it this far, you're already ahead of most. If you found value in this breakdown, drop a like and subscribe for daily updates that actually matter. And let me know in the comments, does this feel like risk or opportunity to you right now? I'll see you in the next one.